Hey there, welcome to this episode of the Coastal Conversation. My name is Carey Sobel. I am the Chief Acquisition Officer here at Coastal. And you're probably familiar about Coastal, but not about the Coastal Consulting Division, where we do exit planning and M&A advisory. And exit planning isn't really about selling tomorrow. It's the process leading up to it. It's preparation. It's educational, if you will. And there's no better guest to have on when we're talking about that than my good friend Jason Hendren of Hendren Business Advisors. Jason, thanks for joining us today.
Thanks for having me. We've been talking about doing this for quite some time.
And we finally did it.
And here we are.
And we have a lot to talk about today, including a really fun event that we have coming up. But prior to doing so, I want to set the stage so people that are tuning into this episode know a little bit about you and what you do. The short form, tell me a little bit about yourself and Hendren Business Advisors.
Yeah, thank you for that. For folks that I've never met or don't know me or my story, back in 2002, I got into a partnership and started a company that was involved with energy efficient lighting. And it was a great time for that. We were just coming into a big retrofit phase of fluorescent fixtures, predating LED by quite a bit. And I owned the business in a partnership, grew it, had a really nice run. My partners expressed the desire to exit the business. So in the depth of the great financial crisis, I found the money to buy them out for a period that ran from 2009 through 2012. I owned the business all by myself, had a very nice run. Coming out of the great financial crisis, there was more and more opportunities and rebates and reasons for people to retrofit their energy efficient lighting. And I had this factory that built all those products. In 2012, I did a deal where I sold the majority interest to a private equity group. And then from 2012 to 2017, we made all kinds of investments in the business, grew it, and sold it again. So throughout that entire run, I really got to understand how private equity builds, values, acquires, and actually creates enterprise value in companies that they buy. I've sat both as a buyer and a seller multiple times. And when I finally left that industry right before COVID in 2020, I had some friends and colleagues of mine come to me and say, hey, can you help me navigate this process? Not as a broker, not as an investment banker, more as a Sherpa, just kind of somebody to lead me through. And I've been doing that for years now. Gosh, it's been several years now. During COVID, one of my COVID projects was I wrote a book titled Things I Wish I Knew Before I Sold to Private Equity, where I wrote down all the lessons I learned going from entrepreneur to private equity backed CEO and kind of how that transition went and try to pass those lessons on to future entrepreneurs.
And it's a phenomenal book. I read it beginning to end, and it is the best form of education for a business owner considering the sale of their business now or well into the future. You take complicated subjects and you make them easier to digest. And it's very fluid to put yourself in kind of an owner's perspective as you read your voice through the book. It's great. So highly encourage everyone that's listening today to listen to or read Jason's book. And we were talking about how we met before we started the podcast, and we actually don't remember. I mean, it could have been the UCF circle. It could have been just the entrepreneurial community, but I've heard you speak before. I know we've engaged in UCF athletics together, but we've been talking about, this exit planning advisory for some time. And now you are not only the CEO of Hendren Business Advisors, but you're also a partner of Coastal at Hendren Business Advisors, where we're doing some exit planning work together.
It's interesting. We've actually been talking about collaborating in some way, shape, or form for many, many, many years.
Before Coastal even existed.
Existed. Yeah. Our relationship and us discussing doing something together predates Coastal. One of the things that we've always talked about is that we both have a passion to help entrepreneurs navigate this, because while you are a business broker and an M&A professional, you were an entrepreneur before that, and you've gone through and earned your chops as an entrepreneur doing exits, and I've done the same. So we had that kind of entrepreneur first mentality, and I think we both have the ideology that it's important to pay it forward and to be a good a good resource and a good steward of your client's trust and not just monetize every relationship.
Absolutely.
And I think we've both been successful in that respect. So as things evolved and things changed and Coastal became a reality, you became a partner at Coastal, we started talking more and more about how we could work together. And, I think the partnership brings value to both of our camps.
Without question. And I think you hit the nail on the head of being able to actually experience it as an entrepreneur themselves. In the broker community, there's a lot of M&A advisors that have never owned a business. Mm-hmm. It's very hard to sit across the table from somebody like that and relate to them. So we also talked about some commonality of the frustrations of going through the process and dealing with private equity. And not only just helping people, but also the frustrations that we can see from an outside perspective on what business owners are missing. Mm-hmm. And without that education, they could be in a lot of trouble.
Yeah. And one of the things that I find, and it was really clear to me the first time we were ever on the Inc. 5000. So here is this, directory of 5,000 companies that are growing, which is a lead generation list for many, many, many people. And I was just getting calls from all types of folks that just wanted to monetize the relationship. Mm. And one of the things that I've always been very afraid of is that there are people out there whose primary focus is to monetize the relationship, not serve the client. And a lot of people who are entrepreneurs understand their business intimately. They don't understand M&A intimately. And they have a relationship, whether it's from a local business group or, a Vistage group or a YPO group, and it's that person who's in that group, and they just select that person who's there to monetize that relationship. Whether it's the best fit for them or not is irrelevant. And it's always been very important for both of us to always serve that entrepreneur first and not monetize the relationship.
And what's funny is I think a lot of the stuff that we discuss with business owners is very practical and rudimentary in its natural form, but it's not to the business owner, right? Mm-hmm. So I don't know shit about lighting. You knew everything about lighting as a business owner. If I was able to provide you the knowledge that you have today, mm-hmm. as you were navigating through your journey, you would have probably been even more successful than you were. Somebody who's gotten 2 bites of the apple and now can write a book about the things that you wish you knew before you sold to private.
And a lot of the things that are in the book, as the title implies, are lessons that I really wish I had back in 2011.
Yeah.
And things that, really could have moved the needle for me, not necessarily in process, but maybe the way I structured things, the way I approach things. And when I'm doing Vistage talks these days, I talk to business owners about what it means to have a profitable business that's supplying you really good cash flow, but not leaning into things like margin expansion and growth and what a 5-year forecast is. And they stumble into an exit because that's what I did. And next thing you know, someone offers you the price that you deem as being life-changing, valuable, the thing that you want to do to kind of move that exit forward. And then you look at it in retrospect and go, man, if I had been strategic and more thoughtful about this 18 months earlier, my proceeds could have gone up by 30%.
And there's so many variables that play into that. And,
so many.
One of the topics I want to talk about was, the problems that business owners have. And one, 80 to 90% of a business owner's wealth is typically locked up in their business. Mm-hmm. But we listed a couple other things that are kind of the meat and potatoes of what we portray, such as not understanding private equity, mm-hmm. Not knowing their true EBITDA, which every business owner should know at any given time. Buyer risk and understanding the other side of the table, right? Mr. Seller, Mrs. Seller sits in their shoes and they don't look at the opposite side of the table. They're unknowingly killing their value by not understanding some of the basic things that we teach through education and as a part of our engagements.
It's interesting when it comes to business owners and contemplating a transaction with a buyer, there is a large amount of information asymmetry. You have a buyer on the other side of the table that understands M&A and buying businesses intimately because that's what they do every single day. They're evaluating businesses. They're evaluating their value. They're evaluating multiples and what debt structure can be put on them, the management team. And behind the scenes, they're evaluating the industry and the runway of the industry and where they think this business is going to be when they sell it. On the other side of the table, you have a business owner that knows that business and that industry and that customer base and that product base so intimately that the buyer doesn't understand. And the buyer, whether it's before or after they give you an offer, before they actually get to the closing table, they're going to spend a lot of time getting to know all of that stuff, whether it's through a market study or due diligence or having calls with customers or calls with suppliers and try to figure out the industry and where your position in it is, because they don't understand it. So a lot of people get frustrated in the due diligence process because everybody that's involved with the deal is trying to close the gap on that information asymmetry. And in the process of doing it, it's really frustrating for everybody involved, especially for the business owner, because they're like, why is this taking so long? Why can't they come to a conclusion like this should be easy? And they're like, nope, we have to turn over every stone before we write that check.
And if you don't have an advisor by your side that's, to your point, chirping you through the deal, and there is a difference between an M&A advisor and a business broker, which is the hat I typically wear, versus an exit planning advisor, which is the hat you typically wear, where I may do some transactions. You may guide people towards a transaction, but ultimately we are leading through education. We are teaching about the deal for that seller that knows their business, that does not know the intricacies of going to market and margins and the effect that small little things that they're not thinking about on the day-to-day ultimately have on the value of the business.
Yeah, one of the biggest compliments that my clients ever give me is you predicted what was going to happen before it was going to happen. Like you can kind of see whether it's trends in the questions that are being asked or how due diligence is going, or maybe the evolution of your actual performance versus your forecasted performance, whatever it is. And I always end up having this conversation with the seller where I have to talk them off the ledge.
Yeah.
The investment banker's engaged. We have the LOI where at some point in the due diligence process, they're asking questions. They don't understand why those questions are being asked. And I have to kind of reel them back in and say, okay, here's what everybody's thinking. This is what they're thinking. This is what your attorneys are thinking. This is what your investment bankers are thinking. And this is how you should interpret this in this moment without losing focus for the ultimate goal. And I end up having to be, part-time therapist.
I was going to say part-time therapist.
Yeah.
And a lot of the parts of what we do is emotional, controlling the emotions, controlling the narratives. But, being able to take somebody who is walking into a intimidating situation and just take a step back, take it step by step, understand the process, it really helps. And there's not a lot of exit planning advisors out there, there's not, but there's also really not a lot of good exit planning advisors out there that have walked the walk, right?
Yeah. So, you'd mentioned this earlier and it bears repeating, I'm a big fan of personal balance sheets. Like individuals, whether you're pre or post exit, should maintain a personal balance sheet. You should do it every quarter. And part of that is valuing your business. And if you're like most business owners, like 75% of your net worth is in the business.
Yeah.
So it's intimidating to do a deal. It's a situation where you are selling simultaneously the biggest transaction you'll probably ever do and the biggest piece of your personal net worth. And if something there doesn't go right or you don't hit all your markers and there's something bad that comes out of it, if you have to rebuild it and start all over again, I mean, most entrepreneurs don't have the energy to do it twice.
No.
I know I certainly don't.
No. And it's unfortunate that the business owners that are, maybe it's a lifestyle business, maybe it's not. But it's unfortunate that most of those individuals are not looking outside of the typical investments that you can make in, market exposure of your financial advisor at the big box shops to really start building wealth outside of the business so that when the time comes, you are not restricted on what the sale price ultimately is.
It's interesting. I was talking with a fellow today who he is, not even lower market, private equity. He's looking to write, $250,000 checks to businesses that are profitable, but not really scaling yet, but scalable. And his comment was the biggest problem he has with a lot of those entrepreneurs is they just start buying boats and cars the minute they get money, instead of either reinvesting in the business, building a fortress balance sheet, or diversifying their net worth by getting some of that money out of the business when they take a distribution and doing something outside the business. And, in today's environment, you can do things that are investments, but also give you a little bit of a tax haven. And they're more interested in buying big boats.
Yeah. And it's going to be hard to change that narrative ever, like in perpetuity. But I don't think most business owners, when they're forecasting when they're going to sell, first of all, they never know when they want to sell until the day they want to sell, right? Mm-hmm. But if they were able to raise their hand several years before the actual process comes and get some advice, that's kind of what we're focusing on a little bit.
I have a client right now who actually was an old colleague of my business. And he reached out to me, read my book, and said, okay, I think I'm 2 to 3 years away. How do we do this?
Marvelous.
Right? And first thing I leaned into was, okay, I go right to my 4 pillars of exit planning. So the first pillar is, are you and the business ready? So I got him a fractional CFO that can get good rear-facing adjusted EBITDA, forward-facing forecasting. Because if we're going to talk to a buyer, we have to be able to tell them what we think our trailing 12 EBITDA is going to be at the time that we're in the process.
Yeah.
I model his deal to make sure that he understands where his EBITDA multiple, cash-free, debt-free, where his balance sheet is, bring all that together. So I make sure that he's ready. The second pillar, which is something we're working on with him right now, is where's his team? Mm-hmm. So we're right now going through a operations manager being elevated to president. The president role kind of brings him out of the hot seat a little bit as he's in his 50s and as wants to prepare retirement in his 60s. Mm-hmm. We're making sure that key employees in his company have a reason to stay through due diligence, have something in the transaction. So we're getting the employee side of that all taken care of. The third pillar that I work on is having good advisors. We have a M&A attorney teed up, ready to go. And I want to have that very early in the process because I want that attorney to review his investment banking contracts and have that person in place to review IOIs when they come in, because IOIs and LOIs are often way too vague, and they get the LOI, they're ready to sign the LOI, and then they hire the attorney. Well, at that point, you've kind of missed a couple of the boxes. He's doing everything right.
And the attorney doesn't know anything about the business at that point, too.
Yeah, or the temperament of the owner, or, any of the nuances of the business. And then the last piece, which will come later, is as you're actually looking a transaction in the face, do you have your estate planning done? Do you have your wills and all those other documents done so that when the money comes in, you have a place to put the money? And do you have a tax strategy? What kind of investments? Because when you have a liquidity event, now you have capital to deploy.
Yeah.
And when you're ready to deploy capital, obviously you can't do it all on day one. But within that tax year, you have some options that I didn't have when I exited my business in 2017 to do investments that will offset taxes. And I want to be ready for that so that all of these things can fall into line.
And that fourth pillar is critical and a good segue into one of the next points I wanted to bring up. However, we're going to dive deeper into all 4 of those pillars in another episode. Mm-hmm. And I'm excited about that. But we often talk about it's not what you make, it's what you keep, right? So you could get a incredible check. And I think there's really there's 100 things that could make that check go down. First one's tax. The second one, I think, is the terms are sometimes more important than the price, right? There could be little bits of language in there where you see that big number, but to actually achieve that number, there's hurdles that are virtually impossible to hit. So we'll talk about that. But on the tax part, so when we meet with a business owner, and we're not CPAs, we're not tax strategists, but we understand conceptually what some of these things do. But more so than anything, teaching or educating a business owner about tax mitigation tools, when should you start looking into those?
I am not the expert in that. I like to, as soon as we are signing up an investment banker and we have a horizon, I want to start thinking about it.
Yeah.
We talked about, the partnership between what I do and Coastal. What Coastal brings to my practice and my clients is a deeper understanding of those tools and a broad portfolio of investment opportunities that can be deployed to reduce taxes. That's what the Coastal partnership brings to my clients that I did not have as a sole practitioner because I'm just not in that realm.
Yeah.
So, what I like to be able to do is when I have a client and we're just about ready to sign that investment banker, bring in Rich Hayes and have them talk to that client about, equipment share or what we can do in car wash or storage opportunities that give accelerated depreciation, and how we could use those tools to say, hey, you're going to have X number of dollars to deploy. You should have this percentage in an alt strategy. You want to still do your stocks and your bonds and, your retirement savings. But what percentage of that net worth, and the percentage changes on how big the net worth is.
Yeah.
How much of that should be going into an alt investment strategy that gives you some tax saving tools. And that's the expertise that I don't have, and what the Coastal relationship brings to my clients.
And conversely, most of our Coastal clients are high net worth individuals, and a lot of them own businesses. And being able to offer exit planning advisory, M&A strategy, and just the wealth of information that we share is kind of the opposite side of that. And, every time I sell a business, I'm asked, how do I save on tax? What do I do with this money? So it's a beautiful introduction to, M&A for Coastal clients, and vice versa for putting Coastal in front of people that are about to sell their business. Mm-hmm. And it's a great segue to talk into something that you and I have put together called the Business Owners Summit. And the Business Owners Summit is going to be a one-day shop from 10 a.m. to 3 p.m. that we're hosting on March 27th. So Friday, March 27th at Four Roots Farm, we are going to host the first Business Owners Summit. And it is going to be an educational day where we are inviting serious business owners that have a serious desire to learn. This is not a pitch. This is not for tire kickers. This is for business owners that, whether they want to start the process that day or years down the road, we believe we're going to bring quite a bit of value to them to teach them about not just the exiting process, right? So we have a nice format. It's going to be a discussion between yourself, myself, and Richard Hayes of Coastal. And we're going to start off by you giving your presentation called
Skip Your First Exit.
Tell me a little bit about it.
Yeah, so for the past couple of years, I have been providing this content to Vistage groups. And Vistage groups are made up of CEOs and executives in small to medium-sized businesses primarily. And what I do is I come to them and say, hey, I was in your shoes. I was a sole practitioner. I owned my own business. I was managing all this stuff. I became pretty competent in my industry. And then I brought in a private equity partner who was really competent in building businesses, and they drove our value higher and higher by deploying some really important but executable tools, things that you could be doing in your business. So what I do is I walk those entrepreneurs through an exercise where we talk about how private equity creates a return for their client and the tools that they use. And I walk them through some exercises to show them exactly how it works and exactly what it does to the value of the business. We talk about building a management team, continuous improvement, margin expansion, and how these things drive the value of the business. Now, I've been doing this talk for years, but for so many of my local friends and colleagues, they've never had exposure to that content because they're not in one of the Vistage groups that I've spoken to.
Right.
So when you and I started contemplating what this could be, the idea was, hey, why don't we bring this content to our network of business owner friends who would really find value in it? And then we started saying, well, if we're going to bring them together, a lot of these guys, even if they're not exiting their business, they still want to save on taxes. Mm-hmm. And Richard and Coastal have some things that could help them save on taxes when they take a dividend or they take a distribution. What if we can give them some accelerated depreciation that go with it to offset either 1099 or W-2 income? And then lastly, and this is the part that I love, I think it's great when you have folks and you bring them together and you really give them some takeaway. You give them something that they could take home right now that's actionable. And we spent a lot of time noodling on a list of 7 things that you could do to accelerate the value and make your business more saleable. And they're lessons that we learned from having advised clients, running our own businesses, going through the exit process, both as a buyer and a seller. And these are things that when we see them in the process, they make that client more valuable, more saleable, and we can bring that to this group and say, hey, if you do these things right now, and everybody in the room can do these things right now, when that time comes from you, your business will be stronger, it will present better, and you'll find yourself not only getting more valuable, but some businesses aren't saleable.
Yeah.
Like it'll make your business saleable where
Yes.
you could take that business and actually create an asset out of it.
I think it's going to be foundational for people that have not explored any of these things. And with the 3 different chapters that we kind of have in the programming, for one, being able to hear your story the way you present it, I think it's incredibly relatable. And when I listened to your presentation, I learned things that I did not know just by you talking about what it's like to be in that sell side with private equity. I think anybody that's there will have a desire to learn about tax mitigation strategies. There's not going to be a single business owner that raises their hand and says, I love writing this check every year. So, and then of course, I do hate when you go to some of these events and you don't leave with, okay, well, what did I learn from this? Maybe you got some information, but it's in one ear, out the other. We're going to provide 7 ways that they can literally leave and start working towards whatever their goal may be one day, which may not be to sell. It may just be to increase the value of their business. Now, I don't think most business owners start their business day one with the intent to sell it down the road. They just start it because they're starting it. But there's a period in time where you go, what am I doing with this? I'm not going to live forever. And the information that we'll provide in all 3 segments will be valuable to just about everybody in there.
Yeah, when it comes to exits, I like to kind of boil things down to first principles. Like, can I simplify this down to something that's just kind of immutable, right? Like, just this is the way it is. Mm-hmm. When it comes to owning a business, one of 3 things is going to happen. You're either going to die and leave the business to people that may not want it, you're going to sell it, or the business is going to fail. Mm-hmm. If there's a 4th option, please let me know.
Yeah.
I can't come up with
We haven't
4th.
found it yet.
Yeah. So I don't want to ever plan for a business to fail. And if your wish is to run this business well into your golden years and you have children in the business or you have somebody, great. Most entrepreneurs are not in that situation.
Yeah.
The last option is selling it. So if you're going to sell the business, let's be thoughtful about it. Let's know that is something that's probably going to happen at some point, and let's sell for the right reasons, not the wrong reasons.
Absolutely. So, we were talking about what can an attendee expect to walk away with if they're at this event? Well, one, what actually drives value, right? Because a lot of your tools and techniques and things that you teach are what private equity is looking for. And if all of those things are there, the business will insurmountably be worth higher if when they start doing their checklist or their sniff test, you're going check, check. Oh, wow, they got their shit together, right?
Well, one of the things that's interesting, so kind of coming back, the title is Skip Your First Exit, right?
Yeah.
People are like, well, what does that mean? Let me tell you what it means for me in my world. In 2012, I sold 73% of my equity to a private equity group. The business had no debt. I had no partners. It was cash flowing. I had a fantastic team and things were just good. And I spent my day every day hustling to try to figure out what products I wanted to whiteboard with my engineers and how to just keep getting more and more sales. Well, my private equity group came in, and when they came in, they had an investment thesis of what they were going to do with my company to make it more valuable. And over the next 4 years, the things that they did in that business to make it more valuable, investing in an engineering lab, margin expansion, geographic expansion, like things that I was kind of doing, but wasn't really doing.
Yeah.
They made it part of our core language at the company. And 4 years later, every department in the company was firing on all cylinders in a way that we had never dreamed of. Same people. Mm-hmm. It's not like we fired everybody and hired a bunch of, unbelievably, educated folks, but just every day, every week, every quarter, we had things that we were doing, and we 6x the value of the business.
Well, in the private equity company, clearly they're professional buyers. They've done this before, and they know how to execute.
And they're professional operators.
Operators as well.
When you take somebody who has been at an operating level around companies that are in manufacturing, distribution, service, and come to my company that was in manufacturing, and yes, we had a distribution portion, and yes, we had a service portion. Like there were all these things that we did. And they said, hey, we've been doing this for 20 years, and here's a whole bunch of things that we can do. And we know that if you invest in, engineering capabilities and really lean into what it means to have a product roadmap, in 3 to 4 years, that's going to pay dividends because we're going to grow, we're going to have more products, and we're going to have a more robust supplier chain.
Yeah.
Boy, were they right.
Yeah.
And I didn't know to do those things. I didn't know to lean into it. It was me on a whiteboard with an engineer banging metal out of the machines and trying to figure it out.
One person can only take it so far, especially when you are, focused on growing your business and working on your business, not some of those outside things. So, of course, you'll learn at this event how to increase the value of your business. You'll learn about private equity. You'll learn how buyers and investors think about transactions, which is incredibly important. You'll also learn where your value or your business may be leaking value.
Yeah.
Right.
Oh, yeah.
Little ways to plug the holes. And
I always like to say, I like business owners to have an asset-based mentality, right?
Mm-hmm.
So what that means is that if you owned a piece of commercial real estate, you would have escalations in all of your leases. Every year, you would expect the value that you were getting from your tenants to go up.
Of course,
you're going to have your triple net that covers your overhead. Your lease rate, that's your profit. If you treated your business in the exact same way and said, I need to get focused on my triple net side of things. Do I really know what my fixed overhead is every month? Are we monitoring that fixed overhead? Do we know how much revenue that we need to cover up our fixed overhead and how much margin changes goes to that? And then how do we expand every single month so that we get those escalations? If you did that in your business every single quarter and made it core to what you were doing in the business over a 3 to 5 year run, that's really going to increase the value of your business.
Without question.
So don't wait for the private equity company to come in, buy your business and do all those things and sell it at a profit. You do those things now.
Yes.
And you enjoy the upside from that.
Mm-hmm. Certainly. And while we could dive super deep into a lot of the topics, most of it will be surface level because we want to keep it that way because, it is an invite only event. We do have a certain capacity of people that we can put into the room. And we want everyone to walk out with some type of value, but then also wondering what's next. What do I do next?
Yeah.
And of course, in our exit planning process and what we do here at Coastal, we're happy to have independent meetings and one-on-ones with every business owner. But just from being in the room, we feel pretty confident that people are going to leave saying, I'm glad I was there.
I certainly hope so. I've been doing these Vista Talks for years, and it's, to this day, I'm still 100% recommended, which means every person who has sat through one of my talks recommends it for their colleagues across the organization. To me, that's very powerful.
I would say so.
What I also think is very powerful is that, in our Central Florida community, we have some great business leaders here, and it'll be great to get a lot of the people who are in our personal networks together and allow them to cross-pollinate. I often kind of lament, when I graduated from UCF, it was the mid-90s. And Orlando was run by the old boys of Florida. Mm-hmm. And not to say anything bad about our friends who attend the University of Florida. It's a fine academic university. But these days, the UCF community here in Central Florida is very strong.
It sure is.
And especially for the folks who are my age, who were graduating UCF in the mid-90s, a lot of those folks are running some of the most successful and meaningful businesses in Central Florida. And a lot of them are in, our networks, being involved with UCF at the board and the foundation level and shareholder side and all the things we do at UCF. It'll be great to bring those people together that are in our networks and allow them to cross-pollinate in such a wonderful venue, which is the Four Roots Farm, founded by the founder of Four Rivers, where they're growing food to give back to the community. It's an amazing mission, and we're going to have a really great time exploring that venue while we're there.
I'm very much appreciative of you introducing me to the venue. I've heard about the project for years, but when we went to go check out the site, it lends great for an event that we're hosting. But just walking into the building and knowing what they're doing, and they'll be there to give a little bit of information to our guests about what Four Roots Farm is and their mission.
So the lunch will be served by their folks. It'll be vegetables that came from their farm. And they're going to come in for a couple minutes and just tell us about the mission and what's going on the property that we're attending. When Carol and I were first formally introduced to their mission and what they're doing, we were blown away by it and immediately got involved with their mission.
Yeah, it's going to be great. So owners that aren't selling soon or even considering selling, why is it important for them to be here?
Well, first of all, we're going to talk about things that you can do in your business today that 10 years from now are going to add value. whether you sell or whether you're just looking to increase your profitability, you should have some takeaway that you have that you look at and say, you know what, we should do this. And I think that's important. We're going to talk about the employee aspect. We're going to talk about financial management. We're going to talk about, things that are outside of the business, whether it's vendors or customers or those types of things. We're going to kind of dig into a little bit of all those things. So I think the main thing is that we want someone to come away with something that's actionable for an operating business, where if they had a private equity owner or a professional business owner, these are some of the easy things that they would do. They're low-hanging fruit to improve the value of the business. And hopefully they come away with a couple of those nuggets and say, you know what, we're going to start doing this.
That would be the goal, and I think we're going to accomplish it pretty well.
I hope so. I think the 7 things that we have teed up for the end of the day, I know what my favorite one on the list is. I know you have some favorite ones on the list, but there are just certain things that I think every privately held business should be doing and should be part of building culture and driving a core language and value structure in the business. That I think there's some things in there that I hope some folks take it away and say, we're going to start doing that tomorrow.
Agreed. I think my favorite thing that you said so far is kind of emphasizing the communal aspect of what we have going on. Central Florida is such a special place. Mm-hmm. I've been here since 2004. You've been here longer than that.
Longer than that.
Yeah, we'll leave it there. But just, UCF supporting UCF folks, Central Florida folks just being cheerleaders for other Central Florida folks. The hope is at any of these events, aside from the purpose of why people are there, that they meet, that they transact, that they stir up some business. I mean, there's a reason why people participate on boards and go to these events beyond just trying to sell something. So our event is selling nothing, complimentary lunch, providing some education from some people in an exit advisory space, tax mitigation tools, alternative investments. It's going to be a really fun afternoon. I'm
looking forward to it. I'm thrilled that we finally put it together, because I feel like we've been talking about it for years, and we finally had a catalyst to do it and said, you know what? We're going to do this. Let's build the content.
And it'll be the first of many. So, we encourage you to attend. Make sure you RSVP, because space is limited. We want to intentionally keep this to a small group. If you have any further information, you can reach out to Jason, to myself, to the Coastal team. We'll be happy to answer any questions that you have. And Jason, I would love to have you on for another follow-up where we can dive a little bit deeper into some specific topics. This man has a lot of knowledge that he's going to share with you in a couple of preceding episodes. So
we look forward to it. Thanks, Carey.
Thank you for coming today.